this still looks ugly. This does not look like a bottoming pattern that is going to substantially extend. What you're about to see is a video snippet from inside the boiler room. Every single morning before the open of the US stock markets, I analyze dozens of stocks and then decide on the trades that we're going to look at for that day with dozens of traders. We all get together, execute trades, chat some, and make some money together on a Zoom conference call. Go to thepatterntrader.com/club to find out more. I've got 3 charts here. I've got the S&P on top, the triple Qs, which is the NASDAQ in the middle, and gold. And you can see they're all kind of got respective green shoots. You know, the NASDAQ much less than anywhere else. So the NASDAQ just can't get a lot of energy. S&P, you know, is way off the bottom, getting a little bid right here. And gold is really the outstanding performer. It's way off the lows and it keeps on making new highs. And I think I said at the outset, I think that gold is going to be the asset class to hang out in for 2023. I think it's a stagflation play. I think it's a play on the fact that interest rates are still below the level they need to be and probably will likely remain so. So you still have actually net accommodative monetary policy despite the tightening. But, you know, where do we go from here? So you can see that the S&P is playing right along this trend line. And to my mind, we still have some room on the upside until we can bang here. There's kind of an area right here around this 4,200 that I kind of feel like, you know, there's a little bit of a gap there that the market might shoot toward. So we may, you know, everybody's looking for this thing to turn. We may actually overshoot to the upside, or we may just collapse here. Right? This isn't a downtrend, and that's kind of the push and pull every day where I'm long, you know, sleeping with one eye open, expecting when is this major downturn going to kick back in. You can see here's the NASDAQ, and this is about what, the 285, 290, not too far from where we are. And that's where this downtrend line would kick in. It's always possible that you overshoot and then kick back in. So it's this constant push and pull. These are bear markets. These are in downtrends. I think it's still structurally a bear market and likely to be, if only for the fact that this is the Fed is what, risen rates 450 points. But they've done that previously, but never this fast. So I don't think that, you know, there's a lag effect to that. And, you know, the question is, when does that kick in? And everybody's waiting for that other shoe to drop. And maybe it takes a little longer, but I think it will drop. And the question is where. But right now, the path of least resistance is higher. And, you know, I think I would buy any dip in the market here. Gold. You know, it's put on this very nice triple bottom here and this inverted head and shoulders. And now it's got this, you know, really nice channel that it is just in this very nice, quiet uptrend. You're kind of at the top, which, you know, is kind of giving me pause as to, you know, it's come very far very quickly. And, you know, we're right at this resistance level. But to my mind, you know, gold is the place to be, and I would look for any pullback to buy gold. So, you know, that's where we are relatively. And now it's really a market of stocks. So you can see you got 2 kind of trend lines bumping into each other right around here. So you got this and then this downtrend line. So, you know, you could either pull back to here or maybe slightly into this downtrend. So anywhere between 140 and 142 is an area where I would start getting interested. But then I'd have to see the price action at that point. You know, I don't want to, you know, sell into a buzzsaw, although I don't think that's what you're going to see. So I'm kind of licking my chops and I'm thinking again, S&P 41 to 43. And so I want to see what that coincides with here. You know, it may just look something like that. It's going to take a little while to marinate. And so I'm looking for this 142, 140 area, and then S&P between 41 and 43. And then, something like this. So again, it just may take some time. I do think this is a market that you can sell the rallies, although, what does that mean? I don't know. I did, and this is the kind of thing where I said, you just can't be perfect, where, the market closes right on the high day before yesterday, and I'm short. It doesn't feel good there. But then the next day, it dropped $7 and I made a fortune of money yesterday. I got out right at the low, 147. I took half my position off. It's just messed up in here. So, and I'll keep playing with it and putting it back on. But I do think that you can use the rallies to short this stock. I think it's over. I mean, does it rally back to here? I don't know. But I think, at some point, this thing is really going to give way. So all of these markets, look like they've got these short-term chart patterns like Qualcomm that could extend, but you just never know. I mean, the macro trend is still negative. So this is what we're looking at. And so this isn't the area you want to look at. Whatever this is, just north of here, slightly north of here. That's where that resistance line is coming in. And this still looks ugly. I mean, this does not look like a bottoming pattern that is going to, substantially extend. So this is the thought process I have continuously. We're in a bear market, and bear market rallies are, extensive and robust, and you can make a lot of money. But then if you don't get out of the way quick enough, it's down there. Hey, if you would like to trade alongside me every day and join our most prestigious program, then head over to thepatterntrader.com/club for more information.